Hi out there. This is Tim Knight with The Slope of Hope, and it is Friday, October 22nd. The man you see on your screen here is probably the most famous man from my home state of Louisiana. This is Huey Long, and I'm going to be just yakking for some part of this. So I've got him up for that purpose. But beforehand, I've actually got a special guest here. You may have heard of him before, Professor Stephen Hawking, the Lucasian professor at Cambridge, and he wanted to come on over and just say a few words. So, Professor Hawking.
Thanks, Tim. This is Professor Stephen Hawking. You may find it surprising, but I am a sloper too. I enjoy the blog, and I express my satisfaction by clicking on all the advertisements, which you can see on the right column. Take it from me, it's the smart thing to do. Farewell, fellow slopers, and good luck next week.
Okay, well, thank you, Professor. Yeah, with Geithner and Obama and now Hawking here, it's this little neighborhood's become quite a hotbed of activity, so thanks. So, just a couple of thoughts before we get into the charts here. My opinion is that, and this is not any news here, but the market left to its own devices really wants to go down, but it's being prevented from going down. I'm starting to get a taste of what it must feel like to be in a totalitarian society because you've got a government affecting natural forces, and it is what it is. I mean, this is the market we have to trade. There will come a day, it could be weeks, could be months, could be years, could be decades, probably months, that this nonsense will end. Something will force the government's hand to behave differently than it's acting today. The fact is that if the government were able to prevent the market from ever going down, it would have never gone down ever. It wouldn't have gone down in 2008. It wouldn't have gone down in 1987 or 2002 or 1931, et cetera, et cetera, et cetera. I mean, the government's not all powerful, but it sometimes loses its grip on things. It's very much got its grip on things now. One glance at, say, this chart right here will prove that too. This is the NASDAQ. We are at, for all intents and purposes, new highs, lifetime highs, it seems, if you sort of go back for a number of years. Where we were back in 2007, before there were, back in the days of Richistan, back when the notion of a financial crash was nowhere on the horizon. So we have returned full circle as if this didn't take place. So there we have it. And like I said, this is what we need to live with. Like it or not, this is what we got. Of course, the big event this weekend will be the G20 meeting. I have, because the torture of the bears got old pretty quickly, I have been inching into longs that I am pretty comfortable with. I'll just thumb through my positions now. We've got Checkpoint, CVI. Here's DMAN. You can sort of see these either at lifetime highs or breaking out of nice patterns. This is the only large long position I've got, and shout out to Market Sniper here because yes, I actually own gold. This isn't because I see gold as some kind of great bargain. Getting down to more like 123.5 or so, that would be more exciting. But I'm doing this for a couple of reasons. One, it is still nicely on that trend line, and two, this is my really G20 hedge. If the U.S. dollar gets just killed on Sunday and into Monday, I gotta have something. I gotta have something to hang on to stem the losses from my shorts. So gold seemed like a pretty good bet. GDX I do not have. Just because from a charting perspective, I'm a lot less comfortable with this. To me, even if there were gold strength, if it closed this gap finally, I would get interested again in that. Historically I've had a lot more success with GDX than GLD, I've got to say. But in this instance, GLD seems kind of the more straight up way to go as far as a hedge. A few others here, GRT. Some of the solars eased back a bit, so I'm back on those again. JASO. Here's a nice one, LAD, which has a nice inverted head and shoulders there. LDK, another solar one with, I'm not showing the volume here. Now this is the kind of stock which I really wouldn't have ever imagined I would ever buy because it's just dull and boring, but it's strong. This is, I think they make tobacco products. I mean, again, I don't care. It's just a chart to me. But this is a pretty handsome chart and one with a very nice, clean stop loss level. So LO is my second largest long position after GLD. Here's MIC. Here's PetSmart, PETM. Again, we have pretty much at lifetime highs. And finally, United Healthcare, which in spite of the health, passages of the health bill, et cetera, companies in the health field actually look pretty promising in some cases. And this one in particular I thought was a very handsome chart. So those are the longs. I do have another so-called long, but it's really not the same spirit, which is UUP. This is the dollar bullish one. I categorize this separately because it's really a bearish position. If this were to zoom higher, then stocks would get killed. I'm pretty pleased with what this has been doing. I've got a stop on this one at 22.29. And simply stated, Monday, this is either going to zoom higher or crack that, and one way or the other. I hope whatever yields from the G20 pushes this up to this level I've cited many times before. That would make a very good place for me to exit, and also conversely for me to lighten up or get completely out of these short positions. I'm certainly not going to show you all my shorts. I've got a ton of them, all of them. In fact, I don't think I have. There's none that are large. The one that's kind of big is IYF, which, in spite of the Nasdaq zooming way over 1% today, this eked out a 0.08% gain. This is the only one that's a little bit big. Is my only ETF, I think, on the short side. The others are all just a smattering of small short positions. One of which, this actually didn't do very well today, but I really like it as far as the chart goes. CREE. This is the kind of chart which has broken an important trend line and is kind of fighting its way back higher. And my stop on this one is the I'm sorry, gosh, probably blew some people's ears off there. I apologize to hit my microphone. 51.61 is my stop on this. It's just above where that gap is. So again, this was probably my worst position today, but it's one of my favorite charts. What else is going on? Even though I think YouTube lets me have 15-minute videos, and I really don't like them to be over 10 because your time is precious, and I hate long videos, being on the receiving end of them. So just a couple of more comments. I covered my XLU short today at a pretty nice profit. This was just a kind of a one-day play. I think that when you have a head and shoulders like this, a retracement that takes place like years later, I kind of question. But still, this level at 32.40, I think represents a very good stop loss level on any XLU positions. But I am out of that. What else is going on? I don't know. I'll just close with a few more. We'll bring Huey back here for my closing comments. The one thing that I've stopped doing is the sort of psychology of tomorrow. In other words, won't it be great when? Fill in the blank. Won't it be great when earnings season begins, or when earnings season ends, or when the OPEX week is over, or when Wave 3 begins, or when the election's over, or when the Fed finances QE2, on and on and on. We just have to take this a day at a time. There's always some reason we can muster up as to why things are or are not going our way. This is the kind of market, I'm just taking it one day at a time. And in this case, the next day is Monday. G20 is going to define it, and we'll see what happens at the end of this weekend. Thanks for hanging in with me this week, and take care. Good night.